southwestern states such as Ogun, Kwara, Osun, and Oyo states. According to reports, 90% of kola nut produced in Nigeria is consumed within the country, while 10% is exported. Other leading countries in Africa in terms of kola nut production includes Ghana, Cameroon, Sierra Leone, and Côte d'Ivoire. And most African countries are keen into commodities such as kola nut to help diversify the economy, and Nigeria is advised to follow suit. And that's kola nut in 60 seconds.
Cotton was a major cash crop in Nigeria in the early 60s, produced in northern and southwestern Nigerian states. However, cotton production and exports in Nigeria saw a sharp decline after the oil boom, with GDP contribution dropping from 25% to 4%. In fact, Nigeria is said to be losing about $6.5 billion export opportunities in cotton annually. Nigeria is also missing out among the selected 15 African countries on the share of cotton in product export by the world cotton market. In recent times, the Nigerian government stepped up interventions in the cotton sector, signing a deal worth $2 billion with a Chinese firm in 2018 in order to meet 20% of West Africans' demand for cotton. More recently, the Central Bank of Nigeria commenced interventions in the cotton industry, distributing high-yielding cotton seed to over 100,000 farmers to boost cotton production in Nigeria. And that's cotton in 60 seconds.
All right, welcome back. In case you're just joining us, it's time for our conversation right now. It's another Wednesday, another CBN weekly segment. Joining me right now are Kofo Salam-Alada, who is the Director, Consumer Protection Department at the Central Bank of Nigeria. Welcome to you, sir, and thanks for joining me.
Thank you, Nancy, and thanks for having me.
All right, Martin Mwelfwang. I hope I got that right. Is the manager CPD, that's Consumer Protection Department 2 of the Central Bank of Nigeria. Welcome, Martin, and thanks for joining me. Long time.
Thanks for having me, Nancy.
All right, these two gentlemen are from the Consumer Protection Department. The Consumer Protection Department is responsible for handling especially your complaints from financial institutions. So for those of you that will say, oh, I used the ATM machine and the machine took my card and I've gone to my bank. My bank hasn't answered me. They haven't credited my money. For those of you that have issues with your banks to complaints or other financial institutions regulated by the central bank, these are the people that will handle your complaints, especially when you've escalated to your bank.
Correct.
And they have not responded. They are not the first people to speak with, but in case you've gone many times to your bank and your bank hasn't answered you, these are the people to talk with. But today, we'll see if we'll have time to, speak about that. But you can start sending your comments, especially if you have questions around complaints and consumer, what perhaps your responsibilities are as a consumer. But why they're also here today is that two documents have been exposed by the Central Bank of Nigeria on consumer protection. So that's what they will be explaining to us today. So you need to take a listen so that you understand. Welcome again, gentlemen.
Thank you, Nancy.
I don't work for you people, but I don't know if I explained it. I don't know if I explained that first half well, so that Nigerians will know who you are and the department that you are in at the Central Bank. So welcome again. Director, speak to me about this new guidelines. What are they? I'm aware there are two. Okay. Just speak to me about it.
Thank you very much. Nigerians will recall that sometimes ago, the Central Bank of Nigeria issued a consumer protection framework, and the expectation under this framework is that banks, will be expected to put in place practice, process, and procedure, for consumer protection, riding on the back of guidelines to be issued by Central Bank under the framework. So since then, work has been going on various guidelines. So, so far, the Central Bank has worked on 4 guidelines. 2 have been exposed, and these are on fair treatment of consumers. Then the other one is on complaints handling and redress. which you alluded to at the beginning of the show. You know, the ones we've just issued out now as exposure draft to the public are on transparency and disclosure and responsible business conduct. And I must say that we should let the public know about the practice of central bank, you know, in terms of issuing regulation. Central bank does just not force it down the throat of people or financial institutions. The public and all other stakeholders, the banks, other financial institutions who will be affected by these guidelines are usually part makers of these guidelines. So what we do is in-house, various business units of the bank will be put together to come up with guidelines, with these regulations. And after approval by the bank, it goes out as exposure draft. And that's what we have done. And for these two guidelines, we expect the public to comment their own on or before 13th of August to enable us work further to take on board issues that maybe central bank will have overlooked or issues that will be too onerous on the banks and other, because we consider this very, very important, especially for financial system stability, which is overarching objective of the consumer protection processes of Central Bank of Nigeria. So it is not just that every time it's just the consumer. The interests of the banks who are taken into consideration alongside those of the consumers. So we have before the public out there today these two important guidelines. Maybe we want to start on the first one, which is on transparency and disclosure. Remember I said that the Consumer Protection Framework was issued, and in this framework you have 9 principles, you know, of consumer protection. And what the Central Bank has been doing is to try to issue guidelines to address these principles. Some of them are standalone guideline in respect of each principle, some of them are combined. So transparency and disclosure is one of the principles of consumer protection, and what this guideline seeks to achieve, the objective, is to ensure that financial consumers are given the opportunity of knowing almost everything about any product, you know, that is being introduced by the bank. You know, it will protect the consumers against provision of inadequate or misleading or failure to actually disclose material and very, very important relevant information, and generally guide against lack of transparency that may, you know, occur along the way in the relationship between financial institutions and their customers. So what we have put forward out there is actually the minimum standard expected, you know, of the financial institutions. We expect institutions to actually raise the bar. You know, if you want to beat the competitors, you should raise the bar in the way you treat your customer. And permit me to say that I've always said that banks and other financial institutions should not even wait for the central bank or regulators to actually teach them in this direction, because we've always said that a satisfied customer is the best advertisement, you know, for a financial institution. So what we have just done, we give you the guide, we give you the framework, we give you the regulation, you know, and the contents of these two regulations are not new things for the banks. What we have just done now is to add some element of directives from the central bank there, you know, so that we believe that, if we leave it to, you know, the whims and caprices of operators, the customers will always get the shorter end of the stick. So it's about time that we rise up in protection of consumers. And also we must say that this is for the interest of the financial institutions themselves, because the customers, if he feels protected, he stays in the financial system. It does not only stay there, it's also an icon, a beacon of hope, you know, for other people who are here to be banked, who are here to be exposed to financial services, knowing that, I've been afraid of coming in. Now that I have some level of protection by the regulator, I am free to come in, and I will remain in as a...
Okay, let me bring in Martin. The director has already spoken about the framework guidelines on disclosure and transparency. Are there other things you want to say about it, or do you want to go to the second one before we now begin to dissect the two guidelines?
I think he has covered the field on disclosure and transparency. So I'll just speak to responsible business conduct.
Which is very essential.
Absolutely. Now, to operationalize the framework, as the director has laid in his foundation, a guideline has also been drafted on responsible business conduct. Responsible business conduct, basically, the guideline aims to address predatory practices that undermine consumer confidence in the financial, in the use of financial services. So the aim is that it is to protect the rights of customers, seeing that the power imbalance is skewed against the consumers. And so this is a robust framework that is meant to protect the rights of consumers in this skewed relationship that they are with the financial institutions. And basically it covers areas such as provision of financial advice to consumers, responsible lending to consumers, debt collection, and sales promotions, among others.
Okay.
Yeah.
So let's go through it again, especially this consumer protection guidelines on responsible business conduct.
Yeah.
Responsible lending is there, debt collection, as well as what's the third one? Sales promotion, compliance, and sanctions. But let me come back to the director, and let's take it from here, especially the responsible business conduct guidelines. Like what Martin has said, that this guideline is to avoid predatory practices. But let's quickly take a break, and when we come back, the program will continue. Let's just quickly take a break. We'll be right back. Don't move from your seat, though. We'll be right back. All right, welcome back. In case you're just joining us, it's still Moneyline with Nancy, and today I have officials of the Central Bank of Nigeria. In fact, from the Consumer Protection Department, that department is responsible for ensuring that consumers of financial services in Nigeria, the banks, other financial institutions are protected. So you need to listen in. In case you did not watch the first half of the show, I did say that the Central Bank of Nigeria released 2 guidelines concerning consumer protection, the one for business conduct and the one for disclosure and transparency. I have the director here, Kofo Salam-Alada, who is the director CPD, that's the Consumer Protection Department, as well as Martin Mwelfwang. He is the manager at the CPD department. All right, Director, I actually was speaking about the responsible business conduct, and let's try as much as possible to dissect it. The next few minutes, we'll dissect these 2 guidelines. Okay. It's like the director said earlier, these guidelines have been exposed so that Nigerians can have an input. And there's a deadline, 13th of August. Yeah. So you begin to give your input, and you can email your inputs to the central bank. I think they'll talk about it later. You can also download this, I guess, from the central bank website. Yes, the guidelines, and try to read it. All right, Director, let's quickly go through the one on business conduct, responsible lending, debt collection. You have sanctions, compliance, and sales promotion. What does this responsible lending, what does it mean?
Actually, like I indicated earlier on, that not very many of the provisions will be new in the industry, you know. So it's expected that when you are dealing with your customer, especially in terms of lending, you know, you are supposed to set clear, you know, policies and procedures on consumer loans to ensure that consumers who are unable to meet their repayment obligations, you give them special consideration in your dealing with them. You know, there could be reasons why an otherwise buoyant customer, you know, suddenly due to unemployment and some other reason, you know, becomes almost illiquid, you know, to honor its debt obligation. You need to now consider fair treatment for these people, you know, and with due consideration on their part. Then, a major thing that we're introducing, which also the banks, I'm sure they are doing now, is the fact that there should be regular monitoring, you know, of the loan performances of customers, so as to ensure early detection of signs, you know, of inability to meet this. Then something new here also is this. You know, loans are expected to be guaranteed or secured, either by way of guarantee or by some other tangible or intangible collateral. A major one, a common one for small loans, you know, is guarantee. So we have provisions here now, you know, detailing how guarantors should be dealt with, and how, you know, banks are not supposed to disrupt the sleep of their customers, because if you are making any call for debt for debt repayment, especially under the section on debt collection here, between 8 p.m. and 8 a.m., except otherwise the customer consents to being called, you are not supposed to make a call. You know,
so is that in the guideline too?
In the guideline under debt collection.
So banks shouldn't call?
They should not call between 8 a.m. and 8 p.m. and 8 a.m.
That's interesting.
You know, except the customer says, oh, call me at any time. They are not supposed to call my friends if I'm owing them. You know, they are not supposed to call my employer except to just confirm my employment status. You know, if, for example, what influence they are, you know, giving the facility in the first place is the fact that I work in a particular place, all you need to do as a bank, you can only contact them for, oh, is this person still employed there, you know, before they take further action. Then again, the performance of the loan should also be made, you know, known to the guarantor, to let the guarantor know decide whether he still wants to continue to offer the guarantee. So some other new things that we'll be expecting people to know about is actually that, you know, the bank should confirm from a guarantor when the guarantor is coming up to say that, oh, I've actually sought and obtained the opinion of independent professional, you know, before I will execute the guarantor, then the guarantee. Then he will also be made to declare that he understood the obligations under the guarantee itself. You know, so people don't just rush in. You know, then a major thing is a common form of complaint that we receive in central bank. You know, at the end of the transactions, you will now have argument whether a debtor has fully discharged its obligation or not. You know, we have now put in place that within 5 business days, you know, of the settlement of the loan, let me use the street term now, settlement of the loans, the bank is expected to give letter of discharge, you know, to the, you know, to the borrowers, and also inform the guarantor as well, you know. So then, where a customer has come in to say, I want a loan, so where it is being declined, the bank ought to notify the customer that your loan has been declined. And if the customer insists on the reason why, it should be provided. Okay. You know, before now, it's a matter of choice, you know, for the bank, but now we're making it regular. So it's also to help in gathering credit history, you know, for the customer. And also know that there is an existing requirement by the CBN that when you want to lend, you need to obtain credit confirmation from at least 2 credit bureau, or from the CBN, the credit risk management system that is resident in the Central Bank of Nigeria. So some of the provisions of these guidelines actually are to give life, you know, to some of what has been going on. Okay. You know,
let me bring in Martin. Quickly comment on debt collection and sales promotion.
Okay. The essence of debt collection, as captured in the guidelines, is to ensure that the practice is fair and devoid of pressure and intimidation, you know, of customers, harassment and threats, etc. So it is to ensure that the relationship remains a business relationship and not otherwise. And so, amongst other things, the financial institutions are expected now to have debt recovery procedures that are proactive. That is to say that they must monitor these loans and ensure that remedial efforts are made even before the loans go bad, and give early notice to customers, and ensure that before they commence these debt recovery activities, they should have engagements with the customers and not just wake up and start harassing customers. At the bottom of this is to address the issue of reckless lending, which is something that happens in the industry. And so they are required to assess the capability of customers before giving them these loans, and ensure that these loans are suitable to their needs and their capacity to pay. We believe that if this is done properly, it will dovetail into a more humane loan.
I also saw something that give customers a minimum period of 6 months from the date of notice of foreclosure, the option of a private sale before commencing foreclosure, except where the customer waives the rights.
Yes.
So a minimum, a period of 6 months, instead of just waking up one day and just
selling the property.
selling the property.
Actually, maybe I can quickly address sales promotion. At the beginning of relationship between bank and customer is the fact that there will be sales promotion coming to you. So this guideline now actually requires, bank to display information, that could affect customers' decision, conspicuously in the bank, either on its internet and all that. Then when they are carried out incentive marketing of products and services, it must be in ethical and professional manner. Then something new that we're now bringing in is to actually not tie. It's a major thing. I know maybe we expect some pushback there. That you should not tie the bonus of a marketer to the volume of what he has brought in. This is actually to encourage ethical behavior among marketers. Marketers will not be, because I'm expecting huge bonus, we want to undercut, we want to do so many unprofessional things to actually get an account. Then banks are also to ensure that sales and marketing staff are properly trained and competent to perform their functions. Key one is this. We've had scenarios where people go out there as marketers, they do not even understand the import of the products they are marketing. So now, they are supposed to be knowledgeable in the key features, risk features, and all the critical terms of the product they are offering, to the industry. So then, what is the bank also supposed to do? You need to also measure from time to time the competence, and the continued relevance of any marketing staff that you have employed. That way, we're reducing pressure on the marketer. Then we're also encouraging ethical behavior, which even the National Assembly once alluded to.
Okay, this is quite interesting. I don't know if we'll be able to finish everything in this edition, because this is very interesting and a lot of things that we really need to look at. Okay, you've spoken about compliance anyway while you were speaking. Are there sanctions in case these are not alluded to? Because a lot of people would agree to the fact that, perhaps the central bank is not too hard on banks. Are there sanctions?
Like I indicated now that, yes, some of these things banks are already carrying out, and it's their own interest to carry them out. Central bank has the powers, and we should even let the world know that the central bank is actually interested in consumer protection to actually achieve one of the major mandates, statutory mandate as enshrined in Section 2 of the CBN Act, paragraph D, to promote sound, stable, financial system in Nigeria. And the same law, and other law, the same law in Section 3 gives central bank the power to demand for information from anybody. You may have it at the pain of even imprisonment, to comply. Then Section 57 of the Banks and Other Financial Institutions Act also gives central bank the power to issue guidelines, and also to ensure in that same act in Section 64 that if there are refusal, failure, or misstatement on the part of somebody who is offering information, or somebody who fails to carry out directives or comply with regulation issued pursuant to the powers of the central bank under that act, there are sanctions. Some of the guidelines we have issued, we give specific sanctions, then we will have the statutory function of an amount of money, that the bank will pay if it fails to carry out the provisions of these.
These guidelines have, I believe, the banks would have seen it by now.
Yes.
Are you already having feedbacks from the banks?
Let me use the opportunity to say something, that the goodness or the good in what we're doing now is the fact that to draw attention of people to the fact that these guidelines are out there. Our experience in time past also shows that less than 10% of the bank in the industry, at times will respond. So what we did now was to send to the MDs of banks, send to the relevant officers of banks, and even consumer advocacy groups in Nigeria for them to bring their input. So we're calling on people that for us to have robust, central bank, we try to, in quote, know it all, but because of ownership, we want the stakeholder to have ownership of this guideline so that it can be implemented correctly, so that people have right understanding from day one. That's why we're calling upon them to scrutinize this very quickly and get back to us. Like I told you, the guideline of complaint and redress that we have, only very few banks responded, and
the
they
one
will
of
be
fair
happy.
treatment. Yes.
That one too has been exposed, and we
yeah.
have obtained views from the industry.
Okay.
But let's just also mention that we're not just doing the law in Nigeria. We have also studied other jurisdictions where this is being done, and luckily enough, since Nigeria actually joined the International Network of Financial Consumer Protection, Nigeria has been rated highly in view of the steps that the central bank is taking on consumer protection. So some of these they are like best in class. So we expect more inputs to make it better. You know, where we see strength, depending on the strength of argument from the industry, we're ready, to engage further to discuss whatever views are being put forward by the industry.
Okay, let me bring in Martin and ask that these guidelines apply to all transactions by financial institutions, like I said earlier, licensed and regulated by the CBN. Some people may be thinking, is it just only banks, DMBs, that are they other, because there are other financial institutions. Can you just take us through that?
Absolutely.
So that these guidelines apply to those institutions. So you need to take a listen. Yeah.
Yes, absolutely. The guideline applies to a very wide spectrum, all financial institutions in particular. It applies to commercial banks, merchant banks, specialized banks, microfinance banks, development financial institutions, finance companies, bureau de change, primary mortgage banks, credit bureau, mobile money operators, payment service banks, switching companies, payment solution service providers, payment terminal service providers, non-bank acquirers, super agents, mobile money operators, and other licensed providers of digital financial services. But I need to add also that an interesting insertion in this guideline is this place, which says that financial institutions shall ensure that the provisions of the guidelines form part of any consumer-related transactions, product or service or agreement that they may enter with any other institution which are otherwise not regulated by the central bank.
The essence of this is to actually have a wider application, because we've experienced in the past where you have scenario where very, very onerous terms, are placed on consumers in Nigeria, with maybe inputs or products being sought from outside by financial institutions. And what happens when we want to intervene? You hear that, we're not under your purview, so you cannot regulate us. So what we now want to ensure that if you want to play in this ecosystem, then you should be ready, to actually, to use the common language, to kowtow to the, at least to be subservient to the rules applicable in Nigeria. We are not in any way trying to stifle investment, no. But because, like we said, in the minimum, this is what happens everywhere. There's nothing onerous that we're putting out there that counterparties of Nigerian banks will not be able to comply with.
Okay. I think we have less than 4 minutes to the end of the show, but let's talk about what I had said earlier in terms of a lot of people that may just be interested in perhaps complaining to you. I can't have both of you here and I just allow you slide like that, you escape. What should Nigerians do if they have issues with all these financial institutions they've mentioned? So it's not just the DMBs, it's not also the microfinance banks and all of that. What should they do? And also, because all those things also dovetail around financial literacy, because while you were speaking, my mind was like, financial literacy in Nigeria is not that wide, it's not that huge. You've exposed a document. How many of us will read to understand? How many of us will even see it? So you can go to the CBN website and download and read. But tie that in very quickly.
Good. Your first issue, which is about complaint. Yes, we've always put it out there, that you can reach the central bank by way of email through cpd@cbn.gov.ng. And if you want to call in, the call center of Central Bank of Nigeria is 070 022 55 226. I take that again. 0700 2255 226. That is the call center. You call in, people are there to take your complaint and pass on to our desk for treatment. Then I know a lot of people also complain through the Twitter, but we just want to advise that, you know, rather than going that route, you cannot, we don't encourage you to put your detail out there, because for CBN to actually attend to your complaint, definitely we need to know, you know, the detail of your account number, the amount that's involved. You know, people need to keep their transaction volume away from the public domain. So then again, let's now come to financial literacy. I would like to say that consumer protection actually stands on a tripod of consumer education, complaint, the recourse mechanism, and market conduct supervision, which are the three divisions I even have under me. Financial literacy handled by this consumer education. Actually, it is necessary for the public to know so well about financial system. And you recall that the governor, you know, Dr. Godwin Ifeanyi stated, you know, in the vision just espoused earlier in June or thereabout, you know, that it is necessary for us to take this out there so that consumers will know the detail, the risk, and everything about the product of the services they are being offered to them, so that they can get great value. So Central Bank has been doing a lot in this area, and some of them is that we might be going social media route to actually go out, send out messages on social media on how to learn about financial literacy. And meanwhile, also, we are already also digitizing, you know, some of the hard copy financial literacy materials that we have been before, and we put it out there for the ease of access by people. And these are also being translated into various Nigerian languages, except the one that is unique to Nigeria, Pidgin. And those ones are coming out soon, so that people will be able to know.
All right, let's just take a few comments. We have less than a minute. Hillary says on Twitter, banks alone should not be made to bear the brunt of transactionary lapses. The hostile business environment coupled with infrastructural backbone gaps still abound and constitutes a huge drag as to why these complaints are unabated. Ayo Bankole says, CPD, which is your department, can do much more with the protection of customers in the banking sector. Several banks operate USSD and other online channels outside of CBN guidelines, exposing customers to risk and floods of complaints. CPD rarely responds as it should, leaving customers helpless and cheated. The last one I think I should take is kudos to the two gentlemen. This is one of the amazing developments by the CBN in 2019. You want to respond quickly to Ayo's own?
Yes.
You said your department is not doing enough.
Actually, let's just correct the impression out there that CBN actually issued out guideline on USSD, and we'll just encourage the gentleman to go on our website. You'll be able to see the regulation of USSD.
Okay.
And we do not leave you hanging there. Talk to us, and you'll get help any day.
I think there's much we can take on today's edition of the program. I've been speaking with Kofo Salam-Alada, who is the Director of Consumer Protection Department, as well as Martin Mwelfwang, Manager at the CPD. Thank you, gentlemen, for coming. Let's hope that in days to come, we will continue to look at this document and scrutinize it. 13th of August, which is next Tuesday, is the deadline date for all your inputs. In case you're not happy with it, you can send your comments to the central bank. You can also go to a central bank near you. There's a central bank branch in every state across the country. Many thanks for joining us. Join me again tomorrow. Be the best you can be and be the change you want to see. I am Nancy Nnaji. Bye now.